crores. But let's move on then. A leading staffing company, TeamLease Services, has signed a definitive agreement to acquire Keystone Business Solutions for only around 8 crore rupees as the firm seeks to strengthen its IT staffing vertical. We're currently joined by Mr. Ravi Vishwanath, the CFO of the company. Hi, Mr. Vishwanath. Thanks so much, sir, for joining in today. Want a couple of details in terms of this acquisition. Yet another acquisition from the same space, that's the IT space. Tell us, what are the revenues of this newly acquired company, that's Keystone? What kind of margins does this company enjoy?
Keystone is a small company, it's a small IT company focused on a very niche client in Bangalore.
Okay.
It works at the higher end of the technology. We are kind of on the technology pyramid. It works at the higher end of the technology pyramid with this particular client. For the 9 months, they would probably be doing between about 9 to 10 crores, about 9 crores of revenue for the current year, which is say for March 17.
Okay. Margins?
And and the company enjoys a very, very good EBITDA margins of upwards of between 25 and 30% currently.
Wow.
This is honestly, this is purely on account of the fact that this is a very niche play, and which is where we expect the IT staffing industry to kind of move towards, from the current levels of low-end equilibrium that we currently are seeing. We expect the IT staffing industry to move up the value chain and start catering to the demands of companies with niche skills, and that's what prompted us to acquire Keystone Business Solutions. So this is in line with our strategy of doing roll-up acquisitions as well, where if there's an opportunity to look at small companies which have a niche client base or a niche skill base or a niche geographical base, we would be interested in such acquisitions, and this is in line with our philosophy of acquiring such companies.
Ravi, you said that Keystone has only one client. Is that right?
They have one large client. They do have a few small ones, but then they have one large client, yes.
Okay. And if you could tell us, what will be the cash left on the books of TeamLease post this acquisition? I know you've not paid out too much, just about 8.2 crore. But if you could tell us the cash on the books post this, and this will be your third acquisition in the IT staffing space?
That's right. This is our third acquisition in the IT staffing space, and after this acquisition, we'll still be left with about 160 crores of free cash on our books.
160 crores.
That's right, yes.
All right, Ravi, a couple of more details, just going through a brokerage note that's of IDFC. They expect IT to contribute closer on 3% of their total revenues, and in fact contribute closer on 20% of their EBITDA going ahead. Is that a realistic number? Currently, I think IT contributes only around 1% or thereabouts. For the second half of the year, given that you already made 2 acquisitions from the same space, it's expected to go to around 3-4%?
See, from a revenue perspective, yes. Say about 3% is what I would expect it to contribute for a full year next year.
Okay.
But from a margin perspective, clearly, we had indicated even at the time of the IPO that we would be looking at IT staffing to shore up our overall margins, and clearly our focus with these IT staffing companies would be to see how best we can get extra margins that will support our general staffing business as well.
So how much could FY18 margins look like after this increased contribution from IT, which is significantly higher margins, whether it was ASAP, Info, Niche Pro, or even this Keystone business? So what would FY18 margins look like for TeamLease now?
I would not want to comment on that at this point, Seema, because we have stayed away from giving guidance, and I would not hazard a guess on that right now.
Okay, all right, sir. We'll leave it at that. Thank you so much for joining in, and all the best for the coming quarters. That's the word from TeamLease, making the third acquisition in the IT space. Remember, the company traditionally gets pretty much like 95-98% of its revenues from general staffing, which is your temporary staffing. But on that, the margins are very low, just about 1 to 2%. They're now increasing their focus on IT, whereas you heard the margins are much higher, 25 to 30% on the current acquisition, but even on the previous 2 acquisitions, which were larger in size, the margins were about 15 to 20%. So they are trying to improve the overall margin trajectory.